Gold prices held on to a 3-week high on Monday after speculators reminded not be too short on a higher for longer mantra, as traders assess if the US and its allies can prevent further escalation of the Israel-Hamas conflict, writes Atsuko Whitehouse at BullionVault. On Monday morning, the Israeli Prime Minister denied agreeing to a ceasefire in southern Gaza, which would allow humanitarian aid in and for some people to vacate the area. Israel said on Saturday that its military forces were preparing to implement a wide range of operational offensive plans with emphasis on significant ground operations into Gaza, a week after Hamas gunmen launched a devastating attack. The war has claimed at least 2,450 Palestinians and 1,400 Israeli lives since the 7th of October. US President Joe Biden warned that an Israeli reoccupation of Gaza would be a big mistake in an interview on Sunday on CBS. He also stated that the Palestinian militant group Hamas should be eliminated entirely, but that there must be a path to a Palestinian state. If the Zionist aggressions do not stop, the hands of all parties in the region are on the trigger, Iran warned Israel, as its foreign minister Hossein Amir-Abdollahian was quoted in the semi-official Fars news agency on Sunday. Israel last week exchanged fire on multiple occasions with the Lebanese militant group Hezbollah, which has stated its readiness to intervene in Israel's conflict with Hamas. Gold priced in the US dollar fell by 1.3% to $1,908 per ounce Monday morning, but later recovered half of its decline. The yellow metal registered 5.5% surge last week, which includes the 3% jump on Friday to reach a 3-week high at $1,933. Friday's price action was a reminder to not be, fundamentally, too short on a higher for longer Fed, said Nikki Shields, head of metals strategy at Swiss refining and finance group MKS PAMP in the latest note. Latest data shows that hedge funds and other leveraged speculators in COMEX gold futures and options grew their bearish betting still further by 10% on gold as a group in the week ending the 10th of October, even after Israel declared state of war on Hamas's surprise attack and cut their bullish betting by 0.8%. Short positions rose 68% since September 2023 policy meeting, where higher for longer was confirmed. Overall, that pushed the net short position of managed money traders to the biggest since the 1st of November 2022, when markets expected the US Federal Reserve to go for its fourth consecutive 75 basis point interest hike, the most aggressive tightening cycle in decades. Fresh short positions helped turbocharge the price response to Middle East tensions, as it forced a significant amount of short covering, said derivatives platform Saxo Bank's commodities strategist Ole Hansen. Gold priced in pounds and euro per ounce, meantime, fell on Monday 0.8% to £1,579 and €1,826 respectively, after climbing over 6% to 4-month highs last week. Gold prices in the Japanese yen also paired 0.7% of last week's 5.7% gain to hit a fresh all-time high at yen 9,297. Oil prices steadied above $90 a barrel after climbing nearly 6% on Friday, as investors priced in the possibility of a wider Middle East conflict. The price for silver, primarily an industrial metal, which finds nearly 60% of its annual demand from industrial uses, edged lower 0.2% to $22.70 per ounce, after rising 3.9% last week. Please like this video and subscribe to our channel.